I run a quite expensive online course in investing. You can find it at theinvestingcourse.com, and there you can also sign up to the waiting list for the next cohort. However, you can also get it for free. Well, not exactly all of it, but enough to become a decent investor tutoring yourself. The investing course consists of 6 weeks of material where I show how to find, analyze, and invest in publicly listed stocks. But if you're not ready to spend hundreds of dollars on improving your investment results, this episode outlines the course content of each week in the course. And for each week outlined in this episode, I have a corresponding free and extensive article on Substack, which more or less includes the lessons for free. In this episode, I'll outline all the steps you need on how to get started investing your own money, from opening an account to identifying, analyzing, valuing, and timing your purchases of promising investments. See the article on Substack for links to full articles for all the lessons. If you know Swedish, you should check out the Swedish version of the course. Run into your boss's office now, or rather send them an email and ask them to sponsor you with 7,450 Swedish krona for the mini package. If their limit is 5,000 Swedish krona, ask for that and pay the balance yourself. And now onto the free investment course. There is a beginner's guide to investing available if you read the article on Substack. It covers the basics of how and why to open an account and start investing. That guide explains how to register an online trading account, and it also addresses why one should invest at all to begin with. It's intended for a broad and inexperienced audience, but it should prove valuable for intermediate and advanced investors too. Here are the contents of Week 1 to Week 6 of the investing course. Topics of Week 1: cheapness, value, valuation methods, and the equation P equals F multiplied by V. First, we look at the concept of cheap, focusing on price versus value. Second, we use the P equals F times V framework, which will become your most treasured investment tool. In Week 2, we see that if you screen for companies with a profit multiple below 10 and a growth rate above 10% at the same time, some of the results are probably good investments. These companies are not only growing faster, but are also cheaper than the established benchmarks for attractive valuation and desirable returns. Please note, however, that all traded stocks on the market are considered cheap enough by some investors to balance buying and selling interests. There is often more to the story than just screening for a low profit multiple and a high growth rate. In addition, please note that future growth expectations are mainly provided by analysts that have a positive view on the stock, since negative analysts tend to stop covering the company. Week 3 is about improving the quality of forecasts by modeling future earnings ourselves, based on our understanding of the company's business model and industry characteristics. We ask how the company creates value and what its secret sauce is. Moving on to the contents of Week 4 in the investing course, we learn how to use a set of tools to better time our investments. These include technical analysis, macroeconomics, long-term trends and narratives, making a timeline, and a checklist. Technical analysis tools aim to measure the current eagerness of buyers and sellers. The 200-day moving average and Bollinger Bands are commonly used indicators. They should be used only as marginal inputs, not as decisive factors. Regarding macroeconomics, usually one can ignore macro data, but sometimes extremes in valuation, interest rate trends, or PMI readings might matter enough to consider. In Week 5 of the investing course, we look into 3 parts: designing, maintaining, and optimizing a portfolio. Designing a portfolio involves ranking your best investment alternatives, then buying most of the stocks with the best risk-adjusted potential. Maintaining your portfolio means comparing new potential holdings to the old ones and adding the highest-ranking choice. Eventually, you can sell your lowest-ranking investment on a good day. Optimizing is about trading outperforming stocks for more of your, hopefully temporarily, underperforming assets. This dynamic can create a volatility dividend as you accumulate additional shares over time. Finally, the contents of Week 6. You don't become a pro after 6 weeks of studying. However, now you at least have the tools you need to avoid the worst pitfalls. Start with the P equals F times V framework. Make plausible forecasts for F and V based on all you know. Then consider how other investors will value those fundamentals in a few years. Summarize your case in your diary or as a pitch. That makes it easier to evaluate later and improve your skills. That's it. That's value investing for you for free. Taking the full course will deepen your understanding. It is, of course, something I recommend as its creator, owner, and teacher. But it is possible to go over these notes and articles over and over by yourself, pondering their contents and practicing the methods I describe. If you know Swedish, remember to check out the Swedish version of the course. Run into your boss's office now, or rather send them an email, and ask them to sponsor you with 7,450 Swedish krona for the mini package. If their limit is 5,000 Swedish krona, ask for that and pay the balance yourself.